The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. But we're going to have a very heavily packed week for guests this week. We're going to start out with Jeff Greenblatt. He's a specialist in Elliott Wave and Lucas numbers. He'll be on our show today at 9:30 on Wednesday. We're looking to have Rich Anderson on of Anderson Capital Management. On Thursday, write this down, folks, because this is a really special guest. It's going to be my mentor, John Hill from Futures Truth. The 90-year-old youngster is coming on. He's got a birthday coming up, and he'll be marking his 9th decade. And I spoke with him on the phone at length yesterday. He's doing great, playing golf 3 days a week, trading every day, as are his three kids, John, Lundy, and Holly. And so I think you'll enjoy that. I met him in 1970. He was the man who showed me 618 and 1.618 and the Elliott Wave paper. This was, I think, 6 years before Proctor came out with his newsletter. But I've known John forever, and I've been close all along. I've been to his house many times. He's come out to visit me in California several times, of course, but he's a real straight shooter, and he runs Futures Truth, which brings out the good, the bad, and the ugly. Okay, on Friday, we're going to have Ed Carlson from the Seattle Technicians Association. He's the specialist on George Lindsay, the man that did 3 peaks in the domed house. And then the following week, we might have a really special guest that I'm going to have on at least once or twice, and that's Larry Williams out of the Virgin Islands. Most of you have heard his name, but he and I have been friends for 50 years, and it's the fact is, I knew Larry Williams before I knew John Hill. I met Larry in 1966. When he was living up in Carmel, California, and he and Michelle Noseworthy were doing the commodity, I think it was called the Commodity Timing newsletter. And anyway, and I spoke with Larry, and the other thing that's happening, folks, that's really interesting is that over the past several days, I've had requests from people, some pretty prominent people, about looking into some of the astroharmonics that we've alluded to in some of these things, and also in the book that Shane did just recently on an update of the astrology book. And some people are, I'm talking about some pretty heavy educational places, along with some trading folks. So they're looking at this very interestingly, which they should, because there's got to be something there. So we'll wait and see. So we got a full packed week. The first chart that I've put in here is the chart of the Mercury going into direct and retrograde motion. As you can see, there's something there. And we're going to be, looking at that, because we do have Mercury going into direct station right now. We had the full moon over the weekend. I believe that came in on the 23rd. And then we have the Mercury in direct station. Now, that, sometimes nothing happens with that, but it's interesting that this was a thing that called the top on March let's try that again, May 19th, when we had the new moon and Mercury going retrograde. That was the spot when we had our friend Norm Winsky from Astro Trends on, and we were talking about a potential top at that time. And as if you'll remember, that top came within 10 minutes. It was during the market hours, and it came within 10 minutes of the exact high. I don't know if that was just but the fact that it happened was really we'll see what's really going on with this. So we will have Ed Carlson on Friday. And so we've got a full packed week, but let's just go over some of these markets. We've got Jeff coming on here at the half hour, and we'll be talking to him about the things he's looking at. But the main thing that I think we should look at is, what's happening. 1 second, please. What's happening with the S&P 500 in this rally that we've had? And the first chart that we'll put up here will show what's happening over the last several weeks of what's been going on. You'll see we made this huge ABCD pattern down at the 1806 level. We then rallied 100. We rallied exactly 100 points. The high last night was at 904 and change, and the low on the 20th was 1804 and change. So we're right at that level. And as you can see from this chart, if we get down into this 1870 level, that'll be really interesting, because that'll be a 382 retracement off the low of the 21st, and it will also be a 20-man line. And we know from previous experience that when you see these, they're very, very helpful. Sometimes, it's like everything else, nothing works all the time. But watch that level of 1872. Now, I really believe, given the fact that we've had some really long-term patterns complete, that we are in the midst of a rally. I'll show you the one that we talked about, I believe, on Thursday of last week, because that's when it happened, and that is the long-term weekly on the S&P 500 cash. We made a perfect ABCD pattern down there at the 180 level. We're now trading around the 190 level. So that is completed. We also had the hammer candle that Steve Rhodes has, educated us on, and that's been a really good spot there, because they hammer out a bottom, and we should get a rally. So the quality of this rally is what's going to be important. Now, one of the things that's really difficult, trading for long term, is the fact that you don't have to, but you can come in and make some big predictions. But if you think there's going to be a rally and this thing fails, if it gets back below those lows that we made just recently, folks, this thing is going to go down a whole lot lower. That's the way the charts look. So we'll have to, keep that in mind here. Oh, you know what I forgot to do? Son of a gun, shut the front door and raise the rent. Al, I'm going to have a guest on. I hope you're listening. I'll have to do this at the little break here and get this thing going. Oh, dear. What am I going to do? Okay, 10-4, 10-4. Let's see if I did it. Yep, I'm okay. When we get to the break, I'm going to have to take care of that. Doggone it. Anyway, one of the things that I looked at over the weekend is, because they talk about these FANG trades, that's Facebook, Amazon, Netflix, and Google. And if you looked at those charts, folks, they are not bearish. I mean, these are just normal corrections that we've had. Google actually went down and filled the gap down there at the 672 level and immediately rallied $50. So that's telling you that that's a very important point. The same thing happened, with Amazon. We had the same. Let me put the Amazon one up, because it's also has been an incredible run, and we had a very similar type correction in Amazon like we had in 2014. So these were major bottoms that we hit here on some of these things. The same thing is true as Netflix. Okay, we'll be back right after these a few words, and I'm going to do my best to get Jeff on the line. Okay, hold on.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've also put the chart of the banking index, which has been, one of the weaker components because, we shattered the October lows of 2014, which if you remember, that was a really key cycle low. That was equivalent to the cycle low that we made in August of 2007 before we went up and made a new high and then down again. Folks, these charts are so bearish, it's literally scary. However, they're so bearish that we're due for a rally, and the quality of this rally is really going to tell us what's going to happen here over the next few months. Now, looking at the transits that we've had with the Bradley model and stuff, we have a situation where we could easily rally into the area of mid-February, and that's that's where we could easily do that. We have a question this morning, and someone's asked me about my long-term projection on oil. Well, I really don't know. I think we could probably make $20, but frankly, we might have made the bottom already. One of the things that we talked about last week was the way that the market for crude oil had made that beautiful ABCD pattern on the weekly basis with 15 weeks down in both the AB leg and the CD leg, and we've already rallied 13%. Now, what's happened so far this morning is that we have pulled back to a 38% retracement. And if we don't get any lower than that, in other words, $2 off the high, and this market starts back up again, you could possibly see some fireworks. There's too many people are on the short side of this, folks, and they could be right. And oil could go to 20 or 15, but it might go to 40 or 50 before it gets there. I am saying just watch this 38% level, in the crude oil, because it hit it spot on today, and it's already rallied half a buck from that level. Whether that means anything or not, I don't know, but that was a number, that you certainly want to be watching. I'm watching April crude. And the reason I'm doing that is that I don't have to switch over from March to April. It makes it a lot easier to look at. So that's the primary reason of what I'm looking at. But longer term, I'm not so sure, what's going to happen. But we'll have to wait and see how it holds. This area of $32 in the April crude will be very, very important, because if we can do that, we've got a pretty good chance of seeing what's going on here, and we'll go from that level. After this next break, we're going to have Jeff Greenblatt on, and he's going to be, his specialty, of course, is Elliott Wave, and he works with Lucas numbers, and he's going to go over some charts with us. And he's also a guest with the Denver Trading Group today, and he's going to be giving a 2-hour seminar. 2 hours, I believe. So if you have an interest in that, you can go to the Denver Trading Group, and Ron Rossaway will probably give you a pass to go in and listen to it if you like. But he'll be on in just a little bit. I've had another question about the one of the stocks, and that's Facebook in the FANG section, F-A-N-G. They also call it FANGs, and they use Starbucks. But as you'll notice here, we had that big butterfly pattern in Facebook up at the 110 level. Then we backed off to the we got down to 55% of the low in August. Now remember, many stocks have taken out that all those August lows, but the FANG stocks, Facebook, Amazon, Netflix, and Google never even came close to those. And Google, of course, looks the best of any of them, along with Amazon. They basically backed off a very, very small percentage. So that's what we're keeping an eye on this morning. The longer-term charts, as we mentioned, they look pretty good, but they looked pretty good, back in 2008 after a break like this. They rallied for just 3 weeks very, very quietly, and then all heck broke loose, and we're going to see if that happens again. It's just amazing that some of these things have gone down to where they go. The banking stocks have gotten hit worse than some of the other stocks like Morgan Stanley, and we'll take a quick look at that. Someone asked me to look at this today, and I'll bring it into you. You'll see that the Morgan Stanley, this is the daily chart, but if you looked at the long-term weekly chart on this, the 618 retracement came right in there at $25 a share, and that made that a Gartley pattern on the long-term weekly basis. So it's completed the major A, B, C, D here. In addition, that what it's done is made a weekly Gartley pattern. So we're at major support. That's the bottom line. Whether it's going to rally from here, I'm not sure. We've already rallied 100 points in the S&P in just a couple of days, so that's usually a pretty good sign, but nothing goes straight up. And of course, with the full moon and the Mercury going direct station, that could have been enough to just pull the markets up for a few days and then back off a little bit, and then we'll see if they have the power, to keep going. When you listen to the folks in the news tell you about oil and the stock market, they're putting this correlation in there, but folks, just do a long-term correlation on oil and the stocks, and you'll see that there's very little there. There happens to be some because they're both going down at the same time. That was basically it. But no one talked about this, when oil was, going from 60 to 40 and stocks were going straight up. They don't bring that thing into you. So you've got to remember to learn to do those. Learn to do those yourself. So make sure that you do, like Jimmy Twentyman says, defy human nature. Do the work yourself. That's the main thing. Now, one market that we have to pay attention to, because I think it's about ready to do a big move to the downside, and that's the Treasury notes and Treasury bonds. As you can see from this chart here, we've had a very large ABCD formation in progress here. We've had some lower highs and a little actually higher lows, so we're in this really tight triangle here in the notes, but the emphasis is still to the downside because we've had lower highs ever since the all of last year, because this is a weekly chart. So this market has a bearish overtone from a longer term perspective, which gives us a price of about 10% lower, which would be about a 1% higher in rates from where we are right now. So this is what this chart looks like, from the Treasury note standpoint. And this is the largest of all the commodities that we trade, is the Treasury notes. Now remember, this thing is basically based on nothing but technical analysis, folks. It really has nothing to do with the fundamentals. I don't put the fundamentals in there because I don't quite understand it, but I do understand the pattern, and this one happens to be bearish. It would have to go up a lot for me to change my mind, but right now this certainly has a bearish configuration, just looking at it from what we're watching. Someone asked me a question, what it takes to be a good trader. Well, that's one of the things we could probably ask John Hill, because he's been instrumental in doing it. But from my perspective, is you have to have a commitment that you want to do this, and then in the words of Confucius, you want to be able to it doesn't matter how slow you learn the stuff. The question is, you don't want to stop. Just keep going. So you don't have to learn fast. Learning slow is better. 877-927-6648, and stay tuned for Jeff Greenblatt.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our guest, Jeff Greenblatt, on the line. Jeff, are you there?
Good, happy Monday to you.
Thank you, my friend. Well, listen, I wanted to thank you for coming on, and also you're going to be on as a guest with Ron Rossaway at the Denver Trading Group today, aren't you?
Yeah, it's a big day, isn't it?
Yes, well, you're a lucky camper. Well, he's a great guy, and please give him my regards. I've known him a long time, and I've been up there as a guest because my daughter is from Denver. Well, she's a doctor up there. Anyway, I've posted tell us a little bit about yourself, Jeff, and then I posted the first chart that you have in there on that hourly chart of the S&P. But why don't you tell us a little bit about what you're doing and what your background is?
Well, I've been engaged in these markets for about nearly 16 years now, and private trader just for myself, and I'm an author of a book. It's the first edition was Marketplace Books, Breakthrough Strategies for Predicting Any Market. The second edition came out in 2013 under Wiley, so that's the same title, but it's a Wiley book. And we've been helping traders navigate these markets since 2003. And I suppose my best expertise is as a timer, and we've been timing these markets for years. And we have a track record for very rarely missing an important turn. And we cover all the different markets. We cover the equity markets, we cover Europe, and we cover commodities. And some Forex as well.
Okay. Well, why don't we start here with your first chart, which is the NASDAQ Composite, and tell us what you're looking at here.
Well, imagine to your listening audience, we just had the worst, I guess the pundits are saying that, the worst performance to start a year in the history of the Dow, in the history of the stock market. That's pretty huge. Imagine if you had a methodology that could have caught that top to within an hour. That's exactly what you guys are looking at on that chart, because we have cracked different time codes on various markets according to a 24-hour clock, and each different equity and commodity has its own unique clock as well, but aside from that, they all operate, and you're Mr. Fibonacci, so you would know this, that these markets in timing, they correspond to a golden spiral. The bottom line is that on the 29th of December, while America was out having eggnog, the markets, in a very sleepy fashion, hit their 6:17 to 18 hour window off the August low, and that was it, and it's been down ever since. Now, what we told clients at that time was this is very significant because we recognize this, but it doesn't have to pay off. But if you see the market turning down right after New Year's, you will know why, and you need to press it, and that's exactly what happened. Now, did we know that this is going to turn out to be the worst January in history? Of course not. But the important thing is in pattern recognition is being able to identify where these important turns happen, and this is what the market has been doing for years and years and years.
Okay, now I put the second chart up, which is the E-mini S&P. It also, shows that big down move from December. But what are you seeing here now, and what we have going on in the S&P as of today?
Okay, well, here's the deal. We all know that markets got very oversold in the past couple of weeks. Now, there's a couple of things going on here. One is not on this chart, but one is on this chart, and it's very amazing, the market precision. So let me just say that the markets are moving in lockstep with oil. From the October high, oil bottomed last week, and it missed just by a few hours. It was 1,627 hours down from October, and the golden spiral number is 1618. So at the same time, what we had here was it looks like a move from the November high, that first leg of 112 points. Now you take the 261 extension off of that and measure that off that secondary high of 2097, and you'll see an exact bingo at 1804. And so I think we could both agree that that's fairly significant, or it can be significant.
It certainly was. I mean, we rallied 100 handles, off of that. So let's take a look at the next one that we have here, and that is the one that is the DAX, the German DAX. And we have a lot of folks here at TFNN that do trade the German DAX. So I'll post this chart in, and maybe you can discuss what you're
Well, you guys will
seeing.
love that. And you know what? I think, in all honesty, I think I learned how to do this from you.
Well, that's
Seriously.
surprising.
Well, the thing of it is, I have a bunch of your books here.
You've gone to levels. Yeah. Well, thank you.
This is one of those Pesavento ratios where you have the two legs down. The first leg is 1,307 points. The range is 2116, and just do the math. It's nearly. I rounded this. Okay, everything is within a point or so here, but it's basically the first leg is almost a perfect 1.618 relationship. So
I know, it's amazing.
Can you imagine that this relationship is happening at the same time that the oil market is bottoming almost at 1618 hours? And this is the kind of market timing that we do, and very few people are aware of this stuff. But it can give your traders a tremendous edge knowing that this happens.
Yes, that's for sure. Now, that 1.618 is, that's my fail safe, because if we get beyond that, you can go to 2.618 or pi or 4.2, any of those numbers. But the way you present it here is really, really interesting. I enjoy watching this. Now, if you look for the DAX to make an equal move like what we had back in the middle of December?
You know what? I couldn't. I don't know. All I know is at this stage of the game, I look for upward testing, and if it takes out that, let's say the first, let's just say the first support on that last leg down in the resistance, which I guess was that big red bar near January 14th. The bottom line is that I want to see a retest of that 1307, whatever date that was, the 1307 low from that first leg. I won't look. My crystal ball won't go any further than that right now.
Well, that's all you really need
to. Real test and see if polarity is going to flip, and to see if the bears are going to come back in. But I will say this, that what we have right now is a very interesting...
Jeff, hold on, buddy. We've got a break here to pay some bills.
Okay.
So hold on, and we'll have you back right after the commercial. Thank you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off.
Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we have Jeff Greenblatt on the line. And Jeff, I've posted your last chart in here, so you want to go ahead and discuss that one?
You're talking about the big DAX chart.
Yes, the big DAX chart. That's correct.
Okay, well, that was what told me that there was serious trouble ahead. What you folks are looking at is a kind of rare timing and price and time setups over the course of that ridge that is very rare. You don't see this. If you see the kind of setups like on one pivot in 6 months on a single chart, that's a lot. But we have 3 very interesting pivots that lined up one after the other, and I knew that spelled trouble. How much trouble? Well, we don't know in the long run. But basically, the first pivot is was that you see 1590 degrees on the intraday chart. Like I said, we've cracked the time codes for all of the different markets, and to explain it to you in 10 seconds, this is the kind of stuff that Gann would be doing on an intraday chart, I believe, if he was alive today and had access to the kind of computing power that we have, but obviously he didn't have it in his day. So that was 1590 is close to Fibonacci 1597. Well, that second peak in July, that was just an amazing confluence where you had 1,617 to 18 days from the 09 bottom on this particular chart. At the same time, it was 619 trading hours from the April top. Well, I knew that if that was going to be really valid, that it was not going to be taken out. And then you look at that third peak at the beginning of August, that had a range in terms of price at 617 points, and not trading hours, but 234 real-time hours, and that was the end of it. I mean, see, what fascinates me about this is that aside from China, which started dropping early, and China's another interesting thing because it peaked at a little over 1,600 days from its bottom, which is, we all know, close to 1597. The bottom line is that all this stuff was happening on the German DAX, and where did all the geopolitical problems start happening last year? Right there in Germany.
Mm-hmm.
So I think it's pretty amazing.
Really is. When you stop and think of the socio-economic, what do you call those, complications of bringing all those million immigrants, boy, that's a little scary, because Germany is not that big of a country. So that's a big unknown, in my opinion.
And I think the problem is that people don't seem to realize how much what's happening in the geopolitical realm and in the social realm domestically, how much this really impacts financial markets. And what we're looking at right here is people are having a really hard time figuring out this market and why it continues to rally. But there were a bunch of British statesmen back in the 30s who said that and this is like 1938, that England at that time was a society that just had a very hard time dealing with reality. And I'm talking about Neville Chamberlain and all that stuff. So what I believe is happening here overall is like the grandson of the 1937 to 42 bear market.
Mm-hmm. I noticed that in your comment that you were, well, it looks very similar from a chart pattern. And remember, 1932, the opening day in January that year was the all-time record until we just broke it this year. So that could be another factor that lines up with what you're talking about.
Mm-hmm.
Okay, Jeff. Now I'd like to ask you.
People don't realize this.
Well, that's because they don't do the work. There are very few of us that do that type of work. Now, how would the folks, how would they like to, if they wanted to reach you, what's the best way to get in touch with you?
I have a website. It's www.lucaswaveinternational.com, and my email is lucaswaveman@gmail.com. So it's lucaswaveinternational.com and lucaswaveman@gmail.com.
Okay, now I will post the link in today for the Denver Trading Group so the folks could listen to you. You're going to do a 1-hour presentation, correct?
Yeah.
Okay, now
yeah, pretty much.
You do work with Lucas numbers also, Jeff?
What's that?
You do work with Lucas numbers also?
Well, you know what? We started with the Lucas, and we found that it's interesting, but we've gone way beyond and so much deeper by cracking the time codes in all these different markets, because we're able to see turns in markets all the way down to a 1 minute based upon the internal time clocks of all these markets, and they respond to Gann numbers and Fibonacci numbers and all that stuff. So it's a lot more detailed than when I started.
Well, we learn something every day. That's absolutely for sure. Listen, I want to thank you for having you on as a guest, and hopefully we'll have you on again sometime. Would you like to do that?
Sure.
Okay, that's great.
Sure,
well, thank you very much.
It
was
really
a great presentation, and I look forward to listening to you with Ron Rossaway today, because I will be listening to that show. So thanks for joining us, Jeff, and have a happy New Year, my friend.
Same to you and all your listeners.
Okay, thanks a lot.
Bye.
That was Jeff Greenblatt of Lucas Wave International, and we will post that in there so you can look at it. He's going to be the guest of Ron Rossaway from the Denver Trading Group. That's one of the largest trading groups of people. Let me write this down in here so I can put it in here. Many of you have been there before, I'm sure. Denver Trading Group, GROUP, and he'll be on at 2:30 this afternoon Mountain Time, and Jeff will be talking more about some of the things that we're looking at. Since we were talking about some of these numbers, the real person, in my opinion, that has done as much with Fibonacci numbers and numbers of sacred geometry is my good friend Bill Ehrman, and Bill is in very, very serious health, folks. So please send out some white light for him there in Nashville. He's 86 now. He's from Harvard, and he's studied the markets as much as anybody that I have ever met. And he has never traded. He's never put a trade on. He's never bought a stock. He's never bought a mutual fund. All he's done is just study the markets. And he's the one that I attribute It's a great deal of what I learned from the time I met Bryce Gilmore. So put some white light out for him, because he really understands, what's happening with the markets. But he's quite ill right now, and we're hoping he's going to get through it okay. We've got another break coming up here pretty soon, I guess, and then we'll be able to see what's going on here. Okay, now the next question that someone's asked me is about the some of the stocks that I'm looking at, and if you look at some of these stocks like Morgan Stanley, J.P. Morgan, even Goldman Sachs, these stocks have made major A, B, C, D corrections, much like we've done in that New York Stock Exchange Index, and that is very important, because if we break those lows that we made off of that D point without any rally, and we've rallied 100 handles, off of the S&P, which is a substantial rally, but it happened very, very quickly. In bear markets, that's usually all you get is one quick rally and then down. So we've got to pay a few bills here. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to bring back the chart that my good friend and co-author Shane Smolian gave to us several months ago. And as you can see, this area between January 23rd and January 27th should have been a lower area, which we've had. Now, we've had a really good run here off of the bottom that looks like it came in a day early, but it shows that we have some positive things happening here during the time of mid-February that lines up really nicely with what we see in the Bradley stock market model. And, the Bradley stock market model, I think stands alone for prediction. I mean, it's far from being perfect, but, you can do it years in advance, and it does a pretty good job of what really happens with the stock market. The trading dates are by far very, very good. The trends between months are pretty good. The overall projection is relatively good, but when you stop and think you can do it 200, 300, 400, 500 years in advance, it's awfully good. But looking at the shorter term trends between, like from August to September, things like that, it does a pretty good job. And then the trading dates are very, very important. So we know that there's something there. Hard, far from being able to, find out anything that's anywhere near 100%, because I don't think you'll ever find that. But it does give you some pretty good things to look at. The overall patterns in the market, if you look at all the stock indices, they do have a positive bias. Even the transportation index made that long-term ABCD pattern, making a 1.618 expansion of the low from October in 2014. Folks, we would be at 12,000 in the Dow if we were looking at the Dow Jones, or more, probably lower than that. It'd be probably right around 11 to 12,000 in the Dow, and here we are at approaching 17 to 16,500. So this has been a big bear market in transportations. It started in October of 2014, which is down about a year and a half. So we should get a heck of a rally from here. Thank you for joining me, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.